Hello investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about CF Industries. So CF Industries is a very well positioned company that is going to benefit from a perfect storm. So I'm going to go through that and highlight how this business through different factors is going to see a rapid increase in its revenues and profitability. On the backdrop, there's the invasion of Ukraine that's destabilizing energy prices in Europe. I'm going to talk about the strong agricultural demand, and ultimately, CF Industries makes nitrogen, which is seeing high industrial use too. So all this here is going to lay up towards investors getting a very reasonable return over the next 12 months or so. So it's quite interesting because in the past, 3 years, the share price didn't really go anywhere. And what's particularly interesting is that back in December, when CF Industries said that they're guiding to increase the EBITDA, investors were like, the stock popped 3% on the back of that, probably just algos. Then it really went nowhere. And in the past several weeks, you can see upwards and to the right that the share price is just taken off. And the reason it's taken off is that the invasion of Ukraine is destabilizing energy prices in Europe, and this is leading to gas prices getting quite high compared to where the gas prices in the US. But I'm going to go through all that in a minute. Just bear with me a second here. So it's quite interesting. I look at this and you can see here that the Q4 saw its revenues increase by 130% year over year. So looking back over the past, let's say, decade, CF Industries has seen, let's say, teens revenue growth rates, or to the upside or to decreases. So it's like 10-12% to the upside or 10-12% to the downside. It's kind of very cyclical business, hasn't really seen anything like this. And they are saying that they're up 130% and that it's going to be strong for a while now. And the reason, before I come to that, so what you want to see as an investor is you want to be positioned in a way that the market is favorable, okay? You want to be investing in businesses that are relatively cheaply valued, and the analyst community are all upwards revising their models every other week or so, and this is what we're going to see here. So right now, revenues from analyst consensus are all kind of pointing up and to the right for the next several quarters. And I suspect that these will be even further upwards revised over the next several days and weeks. So that's why you want to be positioned as an investor. You want to be positioned in a way that you're going to be benefiting from that as, more and more institutions wake up and say, let's invest in commodities. That's where you want to be, because for so long, and nobody's really been wanting to invest in commodities. Who'd want that, right? You've been in the back of a 10-year bull market, and it just doesn't make any sense for anyone to have meaningfully deployed capital here. So these businesses have been starved, and they're actually, because they've been so starved, they've actually had to be quite lean in their operations, and this is really a great setup. Okay, so yeah. So one of the things here, natural gas is one of the primary raw materials that goes into making nitrogen, okay? To making ammonia that makes nitrogen, okay? So in Europe, natural gas prices are spiking. That's been widely reported everywhere. But in the US, as you can see here in the graph, it hasn't really gone all that much. So this is not the price of natural gas. This is just an ETF for natural gas. But for all intents and purposes, even if you, I don't have the one from Bloomberg, but even if you extrapolate that, you can see for all intents and purposes, it's around 5 BTUs, the price of natural gas in the US, compared to approximately 35 or 40 in Europe. So there's a large discrepancy between the prices that people are paying in the US, and that if your primary input to make nitrogen is lower relative to your competitors, that gives you a huge cost advantage. So everywhere is going to have to raise the prices of nitrogen, and your input is not going to change all that much, or even if it changes a little bit, your competitors are going to have to see a massive increase. So you're going to be in such a favorable position for if you're trying to sell a product and your input costs are lower than your competitors. So what I find quite interesting here is look at the balance sheet. So the balance sheet, they haven't got any, they've not used any of the revolver over the past 3 years, and coming out of Q4 21, they still haven't used it, still undrawn by 750 million. So that's great, right? So they got that wiggle room, great. The balance sheet has 1.6 billion. Okay, that's offset by 3.3 billion of debt. So it's the net debt position is 1.7 billion. Okay, so remember this thing: 1.7 billion of net debt compared to how it was in the same period a year ago, which was 3.3 billion of net debt. So it implies that over the last 12 months, the balance sheet has improved by approximately 1.5 billion. For a business's market cap is approximately 19 billion, that's a really significant shift in 12 months. And I think that this is just going to continue. So here's another thing, okay? Let's give another context, right? In Q4 of last year, free cash flow was 200 million, okay? While this time around, free cash flow in Q4 was 1.3 nearly okay, so 1.35 billion. So you saw a 6.7x increase relative to the same period a year ago. So just another, so from even another point of view, okay? So in Q3, the free cash flow was 300 million, okay? And in Q4, the free cash flow was 1.1 billion. Said another way, if we think about it, right? So for the 12 months that ended in Q3, the free cash flow of the business of CF Industries was 1 billion. Okay, so over the past 12 months ending in Q3 21, free cash flow was 1 billion. And then over the 90-day period that ended in December, the free cash flow was 1.1 billion. So they made more in that 90-day period than they did over the previous 12 months ending in September. So it just shows again, from many different perspectives, the operating leverage that's inherent in this business. So you want to be positioned in those kind of situations. Now, it's attractively priced, but it's very difficult to have, a reasonable forecast. In the same way that nobody could have predicted how COVID came around, nobody could have predicted the invasion of Ukraine. When you're dealing with these kind of macro investments, it's really, really tough to have any visibility into the future. That being said, analysts presently estimate that the business will decrease in the top line in 2023, and that it's priced at approximately 15 times next year's EPS. But this figure, I mean, it's just a guessing game. Nobody actually knows. But you're in a situation where, yes, the competitors could increase the amount of supply of nitrogen, but to increase that, it's going to take some time. It could increase faster than everybody expects, and that would crush the average selling price. But I suspect that, with so many global chain problems in chaos, I think, and political landscape and everything, I think it's going to be quite difficult for this meaningfully to ramp up and disrupt CF Industries' average selling price. So I think that, the odds look reasonably favorable here. Now, when you come to invest, you really want to be positioning yourself to invest alongside management that has a lot of skin in the game. When it comes to CF Industries, they only own approximately 2% of the company. Okay, so when you're looking at a 19 billion market cap, you're thinking of less than 40 million of, 40 million of equity in the business. This is really not significant. But as Buffett says, the rising tide floats all boats. Even if management isn't, hasn't got a lot of skin in the game, I think the shareholders here will still see very significant profitability over the next 12 months. So yeah, I hope you found this useful. Don't forget to check out my marketplace. It's called Deep Value Returns. I'll tell you what kind of stocks I'm buying, high quality, actionable investment insights. And you're welcome to check out the reviews as well to see what other people said too. Okay, thank you so much for listening. See you next time. Bye.